It arrives as a letter or an email from the Illinois Department of Revenue, a notice of audit initiation for ST-1 sales tax returns. You're thinking, wait a minute, my business isn't even located in Illinois. Why is the Illinois Department of Revenue auditing me? Or maybe you just registered your out-of-state business to start collecting and remitting Illinois sales tax. And then you get an audit notice just a few months later. Why are they auditing me already? Hi, I'm tax attorney Dan Urban, and this video is for you. Even if your business is not located in Illinois, even if you have no employees, no contractors, no inventory, or any other connection to Illinois, if you make $100,000 or more in sales to Illinois customers in a calendar year, you owe Illinois sales tax. Now, this may seem cruel, but I primarily see these audits initiated within a few months of an out-of-state business registering for Illinois sales tax for the first time. When an out-of-state retailer registers for Illinois sales tax, the Illinois Department of Revenue now has all of your contact information. And they do not trust that you registered at the exact moment you met the threshold. So they audit you to determine the exact start date that your Illinois sales became subject to Illinois sales tax, and they make sure they collect back to the day you met that threshold. So what happens during an Illinois sales tax audit for an out-of-state retailer? First, you get that notice of audit initiation. Then you receive contact from an Illinois auditor. They're going to ask you to set up an initial interview, and they're going to ask you to fill out questionnaires with general information about your business. Eventually, the Illinois Department of Revenue is going to ask you for your federal tax return to determine your total sales, probably back several years, and your sales data with individual transactions divided into Illinois sales and non-Illinois sales, again, likely back several years. If the total income on your federal tax return and your total sales data match, the Illinois Department of Revenue generally is going to accept the Illinois sales that you've provided, and they're going to assess Illinois sales tax. If they don't match, the Illinois Department of Revenue is going to assume that the difference are taxable Illinois sales, unless you can prove that they're not. Eventually, Illinois Department of Revenue is going to also assess penalties, and you're going to want to fight those penalties. In general, reasonable cause is the standard for abating penalties, but in my experience, the goal tends to be spelling out all of the ways that you attempted to comply with the Illinois sales tax laws, even if ultimately you are not quite perfect. If, at the end, you don't agree with the results of the Illinois sales tax audit, you have several opportunities to appeal. And if you need an experienced Illinois attorney to help your business navigate the Illinois remote retailer sales tax audit process, check the link in my bio. I'm tax attorney Dan Urban. I look forward to hearing from you.